Hello guys, welcome to Bhavna's Online Academy. So today we are going to learn AS23, which is accounting for investments in associates and consolidated financial statements. Yes, so this is the first video which will contain all your concepts related to AS23, and there is going to be a part 2 to this video which will cover all your ICI material questions. So watch both the videos to get complete coverage, as well as the handwritten notes that I'll be using today will be available on my Telegram channel, the link of which is in the description box below. So do check out that too. Yes. So now without any further ado, let's begin with AS23. So what does AS23 tell you? It tells you how you're going to do an accounting. What do you have to account? You have made some investments that you have to account in the consolidated financial statement. So you have made some investments, okay, and that investments you have to account for in the consolidated financial statement. So how are you going to account it? So you'll say, ma'am, for that we have a standard, no, AS13. Why don't we follow that and do the accounting? Here specifically we are going to read a special case which is accounting for investments in associate. If it is the case of associate, you have to follow AS23 and account it. If it is any other investments, you can follow AS13, which is a general standard on how you have to do the accounting for investments. But if it is specifically accounting for associates, then you have to follow AS23 for accounting. Okay, so now let's understand what does associate mean. Associate means it is an enterprise in which the person who is investing has a significant influence, and which is neither a subsidiary nor a joint venture. It means that if there is A limited is suppose the investor. So A limited is the investor. If the A limited is investing in a company called C limited, and if it has a significant influence, then in such case A limited and C limited, or C limited and A limited, will be called as your associate company. These both companies will be called as associate companies. Now for that, A limited has to invest in C limited. It has to get some what do we say, voting power in C limited. Now how do you say that it has a significant influence? For that, it has to invest 20% or more. It has to have 20% or more of the voting power, either directly or indirectly, in the other enterprise. So it means it has to hold or invest 20% or more. It has to invest 20% or more in C limited, so that it can be called as an associate. Okay, but one thing that you have to remember is it should not be a subsidiary, neither it should be a joint venture. So what is joint venture? You'll read more about it in AS27. But why are they saying it should not be a subsidiary? It means that if suppose A limited, okay, is has to hold how much? It has to hold 20% or more in C limited, okay, to become an associate. Now what if A limited is holding 90% in C limited? Now will these both be enterprise be called an associate? The answer is no. We already know that if any entity is holding 51% or more in other enterprise, it will be called a subsidiary. So A limited will become a parent and C limited will become a subsidiary. So they are saying it should not be a subsidiary. That means your holding percentage should be 20% or more. Your holding percentage should be 20% or more, but only up to 50%. If more than 50% you are going to hold, then it will become a subsidiary, parent subsidiary relationship, and we don't want that. So associate is restricted to 20% or more, but up to 50% only. So all those enterprises will be known as your associate enterprise. Okay, so I hope you have a clear understanding of this. So here you have to also remember, A limited can directly hold 20% or more in C limited, or else it can indirectly also hold. How will it hold indirectly? So there is A limited, there is B limited, and there is C limited. Okay, A limited is suppose holding 10% in C limited, and what is B limited is, so A limited is holding 90% in B limited. So in such case, what happens? A limited will become the parent of B limited. So A limited will become parent and B limited will become its subsidiary. Okay. So here, if B limited again holds somewhat around, we can keep as 15% in C limited, then what happens here? A limited is directly holding in C limited. Okay. And also, because A limited has a connection with B limited, and B limited is again holding in C limited, this path becomes an indirect holding. Okay, so A limited can either hold directly 20% or more, or directly plus indirectly also it can hold 20% or more. Both will be counted when you're calculating the significant influence. Okay, So now if in question they tell you that you have to calculate the percentage holding, how will you calculate? So they'll give you two situations. One, calculate if it's a standalone financial statements, or calculate if it is a consolidated financial statements. So if it's a standalone financial statements, how will you calculate is what is the share held by own company in other company. That means how much is A limited holding in the C limited. So like we said in the example above, A limited was holding 10% in C limited, you have to take that. Then how much is the subsidiary of A limited? Subsidiary of A limited means how much is B limited holding in the other company. How much is B limited holding in C limited? B limited holding in C limited is 15 percentage. So 10% plus 15 percentage, it is going to be 25 percentage. So in your standalone FS, if you have to see whether a company is an associate or not, you have to see how much is the own company holding. That means how much is A limited holding in C limited, and how much is the subsidiary of A limited, which is B limited holding in C limited. If you add that both, 25 percentage, which is more than 20% or more, so this is going to be your associate company. So this is going to be an associate company. But when you are showing in the consolidated financial statement, how do you find out the holding percentage? The first one remains the same. How much is the own company holding in the other company? That means how much is A limited holding in C limited? This is going to be 10% only. But when it comes to subsidiary, there is a change. How much is a subsidiary holding in the other company? That means how much is B limited holding in C limited? It was 15 percentage. But you have to multiply it with something, which is how much is the share of parent company in subsidiary company. That means how much is A limited holding in B limited? A limited is holding 90% in B limited. So you have to multiply these both. How much is subsidiary holding the other company or associate company, and how much is parent company holding the subsidiary company? So 15 percentage multiplied by 90 percentage, it is going to be 13.5 percentage. So if you do 10 percentage plus 13.5 percentage together, direct and indirect holding here will be 23.5 percentage. 23.5 percentage. So this is your percentage holding in consolidated FS. I hope you understood both. Okay, let me just go through both of these ones, you understand better. If it is standalone FS, own company share plus subsidiary company share, directly add it. If it is consolidated, take own company share and add it with subsidiary share multiplied by the holding that the parent has in the subsidiary company. So that share you have to add it. Okay, so this is how you calculate your percentage holding. So this was your basics and we have understood that now. Now let's understand how you are going to account for associates in your books. So there is a method known as equity method, which we are going to read below in the other few points. So that method you have to follow to do the accounting. Okay, so what is equity method? So equity method is a method of accounting which is followed by all enterprises. That means enterprises like A limited and B limited, A limited and B limited, that has significant influence on their associates. So whoever has an associate or a significant influence, they will follow this equity method and account it in their book. So this is how A limited will account it. A limited will use something known as equity method to account for it in its book. But here there is an exception, that in two cases alone you will not follow AS23. So AS23 only tells you to do equity method. So in two cases alone you will not follow AS23. When when the control is intended to be temporary, that means you're not investing for a long period, then in such case you will have to account it as per, you should not account as per AS23, you should not follow equity method. And second is when you have long term restrictions, when there are some severe long term restrictions on transfer, etc., then in such case also equity method cannot be followed. In these two cases AS13 should be followed, which is the general standard for investments, so in these two cases follow that. Only the permanent, not temporary, so therefore permanent holding as an associate only will come under AS23. I hope you understood this theory also. Okay, so in your question what will happen is they will give you some practical questions. Again, practical questions, if you understand this point number 3, 4, 5 and 6 itself, you will be able to account for it. Okay, so in the question they'll tell you to calculate goodwill or capital reserve, and they'll tell you to calculate carrying amount of investment. So if you follow these steps which are written as below, you'll be able to find both of them. Okay, so let's first understand how you find out goodwill or capital reserve. Okay, so first you have to take the amount that you have paid to the associate as an investment to get that percentage share in the associate, 20% or 30%, how much ever you have the share in associates, how much did you pay to get that share? So how much amount have you paid to get that investment. So suppose you have paid 1 lakh rupees, take that. Okay, next is reduce any pre-acquisition dividend received. No, so what is pre-acquisition dividend? So just to give you a little background, so suppose on 1st April 2001 we have invested in that associate. Okay, we have invested suppose 25% in that associate, and we have got a significant influence. Now what the company will do is on 1st August, on suppose on 1st August 2001, the company has announced that the company is giving out dividend. The company is giving dividend, and this dividend is relating to the previous year. So from the previous year profits, this year, in the current year, on 1st August, the company is giving some dividend, and the dividend is related to previous year profit. So now here the question is, we have invested on 1st April 2001 only, and the profit is related to suppose 2010. Okay, should we have a share in this profit? The answer is no, because we were not the investment. We did not invest. We were not the investor in last year. So in this profit also we should not have a share. So this is basically pre-acquisition profit. That means before we acquired, this profit was there, and from this profit, if in the current year they are paying some dividends, they are paying some amount of dividend, that also will not be our own dividend. That will not be our own dividend. So here when you calculate the cost of investment, you invested 1 lakh rupees. Okay, and suppose the company has announced a pre-acquisition dividend of 1 lakh rupees. Okay, and that in that total 1 lakh rupees of dividend that they have announced, so how much is your percentage share you have to calculate? Suppose you that share that you have is 25 percentage. So 25,000 is the income that you have received in the current year from the pre-acquisition, as a pre-acquisition dividend. That means this dividend is not your earning, because you were not an investor, but still you have received it because you in the current year you were there. So in the current year when they announced, you got the dividend. So this you will take it as an income and reduce it from the cost. So 1 lakh you invested, 25,000 you got as an income. So net how much have you invested? You have invested only 75,000. Net you have invested only 75,000. So here the cost of investment, here the cost of investment or the carrying amount of investment in SFS, if they tell you to find out, you have to find out like this only. First you have to take how much amount you have paid for investment less the pre-acquisition dividend. In that, how much was your percentage share? That if you do, you will find out your carrying cost of investment or cost of investment. In that, you have to compare something known as net assets. So when you make an investment in another company, in turn you get something known as net assets. Net assets is nothing but you get the equity of other company. So if you invest 25 percentage, if you pay 1 lakh rupees and invest, if you pay 1 lakh rupees and get 25 percentage, in return of that you will get 25 percentage equity in the other company. Suppose the equity of C limited was, suppose let's take as 2 lakh, or what we can say as 20 lakh rupees. Suppose the C limited had 20 lakh rupees of equity. In that we got how much? In that we got 25 percentage. In that we got 25 percentage. So it was 20 lakh into 25 percentage, which is, you got 5 lakh rupees. You got 5 lakh rupees. You paid out how much? You paid 1 lakh rupees, but you got 5 lakh rupees. Or rather, we can say you paid 75,000 rupees, but you got 5 lakh rupees in return. You paid 75,000 for 25% investment. In turn, you got 5 lakh rupees. Okay, 5 lakh rupees is nothing but equity. So you got 25% equity, or you got rupees 5 lakh. Okay. So if you take that, that means how much is your share as an associate in the value of net assets, or you can say rather in simple terms, in the equity share capital of the associate, how much is your share? Take that. You paid 75,000, you got 5 lakh rupees. So you got extra here. So if that is the case, you will account it as a capital reserve. That will become your capital reserve. But now here what happens is that, suppose you paid 75,000 and in return you only got 50,000, and in return you got only 50,000, then the remaining 25,000 which is there, sorry, then in such case the difference between the both, so then in such case the difference between the both 25,000 will be your goodwill. Here you got less, you got 50,000 only, but you paid how much? You paid 75,000 rupees. Why did you pay extra? For the goodwill of the other company. So the difference 25,000 will become your goodwill. Okay, so let me explain this again. So how will you find out your goodwill or capital reserve? First, take how much amount you have paid less the pre-acquisition dividend, and you will get your carrying amount or cost of investment. In that also, if you reduce how much your share is there in the net value of assets, value of net assets in the associate company, you will get your goodwill or capital reserve. So if the cost is more, you will get goodwill. Okay, and if the net assets are more, you will get capital reserve. Okay, so if why when the cost is more, that means you have paid more. Why you paid more? To get some goodwill, because of the goodwill that the other company has. Okay, so for that you have paid extra, so that in such case cost will be more, your goodwill, that your difference will be the goodwill. But if your net assets are more, that means you have created a reserve for yourself, which is a capital reserve. Okay, so follow the steps and you will be able to find the goodwill or capital reserve. Next is, before we on to the next one, what how when you calculate net assets, if it is not directly given in the question, take what is the equity share capital of the associate company, and what is the securities premium, accumulated profits, reserves and surplus. If you add all of this, you will get the net assets of the associate company. Okay, I hope you understood this. Next, I'll tell you, calculate the carrying amount of investment. Calculate the carrying amount of investment. So here, how will you find out? Above itself, here we found out, right? Here itself above we found out that cost or carrying amount of investment in SFS. So you, that will be the carrying amount or cost of investment in SFS. But now if you have to find out the cost of investment in CFS, you have to do two more adjustments to find out that. So the first adjustment is, you, if in the during the year, if the associate, after you have invested, that means post acquisition, after you have made the investment, what is the profit or loss that has been earned by the associate company during the year, that you have to take and multiply it with your percentage share, that you add it to the cost of investment. Along with that, if there is any post acquisition dividend, so that means this is both are your costs, and if there is any investment or income, investment income, which is nothing but after you have done your acquisition, post acquisition, if they have announced any dividend, that means it is your dividend, it is an income to you, so reduce that income. So if you do though, if you do so, that to your percentage share in that, how much it is, you have to reduce it. You will get your cost of investment in CFS. Okay, I hope you understood this. Here what we have to do, first take the cost of investment in CFS that we found above here, take that. If there is any profit, add it. If there is any loss, decrease it, that to up to the percentage of share that you have in the associate company, take that. And if the associate company has announced some dividend after you have acquired your stake in their company, that means post acquisition dividend, if there is any, that too up to your share, you have to reduce it. So if you do so, you will get your cost of investment in your consolidated financial statements. Okay, so if these two steps are done, the next two that you have to do is nothing but you have to just show extract. This is nothing but your disclosure requirements, that in your consolidated balance sheet, how will you disclose, in consolidated statement of P&L, how will you disclose. Let's first understand how do you disclose it in your balance sheet. So in your balance sheet, it is going to come under your non-current investments. So you will show it as investments in B Limited, or rather here we can say investments in C Limited, which is our associate. Write that. And what is the amount that you're going to show in that, you have to do this calculation. So first take the share of net assets. That means how much is your percentage share in the net assets of C Limited. Take that. We found it as 5 lakh rupees. Then what is the share of profits and losses? That means the profits and losses that have been made by C Limited or made by your associate. In that, how much is your share? And then how much was your goodwill or capital reserve? So if you do all of this, so capital reserve you have to basically reduce. So if it is a capital reserve, it will come in minus. If it is goodwill, it will come in plus. So if you do all these three, if you add or less all these three, then in such case you will get your non-current investments, investment in associate, your amount you will get. Okay, so if it is profit, add it. If it is loss, reduce it. If it is goodwill, add it. If it is capital reserve, reduce it. Okay, so this is how you will find out your disclosure of balance sheet. Next is in your statement of P&L, how are you going to disclose? Under other income, you have to show how much share you have got as profits of associate. From the associate, how much profits have you earned? Okay, take that. That will be your other income. Apart from that, if there is any pre-acquisition dividend that you have received, that you have to say, see, this pre-acquisition dividend, I told you, you'll not show as income. This is not your income. Okay, this is income of someone else, but you have got it. So you had transferred it to the investment account. I told you, you can reduce it from the investment and show. So you transfer it to investment accounts. If you have earned 5 lakh rupees, you reduce 5 lakh rupees also, and it will be shown as nil. It will always come as nil only, the pre-acquisition dividend, but like this you have to disclose. Okay, so this is how you disclose in the statement of P&L. Fine. And next, there are last 2 points that you have to understand, that they will tell you that already A Limited already had some stake in C Limited. Suppose it had 5% stake, and then it got another 30% stake during the year. That means I have purchased some additional stake in the already invested company. A Limited had already invested 5 lakh in 5% in C Limited, but now they have additionally acquired 30% during the year. Then in such case, the goodwill or capital reserve which is arise on both the acquisition. So on 5, when you invested 5%, you would have got some goodwill or capital reserve. When you invested 30%, you would have got some capital goodwill or capital reserve. Both should be shown after netting off. Suppose when you invested 5%, you got 5,000 goodwill. When you invested 30%, you got capital reserve worth 10,000. So if you net it off, you have a net capital reserve of 5,000 rupees. So like this net you have to show in your financial statements. I hope you understood this point. The next point is, if the investment is made for less than 12 months, that means you invested in the mid of the year, only 6 months time period was left for the financial year to end, then in such case what you have to do is the share in P&L, that means the profit or loss that is earned by the associate. So only those 6 months share you will get, because in the mid of the year you joined, you are not there for all the 12 months. So all the 12 months profit and loss will not be your share. So profit or loss which is earned during the year, in that what is your share? Suppose 25% is your share, and how much months you have invested in a year? Suppose you are only invested for 6 months. So take 6 by 12. So 12 months was the total period, and 6 months what was you invested. So for that period, that much profit or loss will only be included here as share in profits or associates, or here in this point. Okay, when you're calculating the carrying amount of investment. I hope you understood this. So what did we learn in this standard? We understood what was the definition of associate, how do you calculate the percentage holding, what is equity method and when you should not apply it, how you find out goodwill or capital reserve, how you find out the carrying amount of investment, how you disclose in balance sheet, consolidated balance sheet, how you disclose in statement of P&L, and two question related points also I have written here. Okay, so this was all about your AS23. I hope you have understood it clearly. If there is any other doubts, please leave that in the comment section below. There'll be a next part which will cover all your sums. So do that. Do watch that also for complete coverage. Thank you so much. And if you did like this video, please make sure to like, share, and also subscribe to the channel. Thank you so much for watching.